Good day, this is Pat Walker of Micron Winners doing the key list edge video for everybody. Every day we make a key list with a video and a tutorial explaining why it's on the key list. It's our shopping list. There's years, decades of research and experience in putting that list together. The reason we do the key list edge video is just to show you what we do at Micron Winners, but also to help you. That's our goal, is to educate on what to look for and what to do in the charts to make better investing decisions. Here's Sienna. It's like, here's the lowdown on it. Group rank A+, accumulation distribution B, composite rating 98, last quarter's earnings up 91%. We look for companies that have great earnings and are great sales. We like to see those numbers accelerating. This is the kind of work we do. 3 quarters ago, their earnings were down 3%. 2 quarters ago, their earnings were up 56%. Last quarter's, their earnings were up 91%. Here we go, minus 3%, plus 56%, plus 91%. They're accelerating. Composite rating 98. Here's what we're looking for. A bounce off the rising 21-day with a volume pickup. That volume tells us something important. They're voting. Big money's buying. Look at that spike in volume versus these previous bars. We're going to be a potential entry. The high on this bar is 195.91. 196. There you go. Let's move on to the next one. What do you say? What do we have here? Micron Technology. It's like, Pat, give me the lowdown. A+ rated group, A accumulation distribution, A SMR rating, 99 composite rating, timeliness A. Last quarter's earnings up 157%. So we build a case, both fundamentally and technically, on what to look for. You'll like this. Big institutions don't just look at the present, they look at the future. Okay, earnings estimates. Analysts are looking for a 105% increase in earnings this year over last year. That's big, folks. That's real big. 18% next year, but more importantly, increasing earnings estimates both years. That's what we're after. So what do we see here? Bouncing here, and again, price and volume. Picking up here on a pickup in volume. Take out the tops of this bar. The high on this bar is 255.17. Could be a potential entry at 255.20. Again, that's the kind of work we do. Let's move on here. We're taking a look at Western Digital, WDC. Say, Pat, give me the lowdown. A+ rated group, A SMR, A accumulation distribution. Composite rating's 99. That's a big one, folks. That composite rating is a mixture of quite a few variables put together into one number. Timeliness is B. Last quarter's earnings up 137%. They're looking for a 53% increase in earnings this year over last year, 21% increase in next year over this year. Rising earnings estimates. Institutions pay attention to that. What do we want to see? What's the high on this bar? The high on this bar is 161.68, 161.70. In a good market with good profit action, good volume action. 161.70 on Western Digital. Let's continue onwards. And the next one we have here is, and we'll get to it right there, Barrick Mining. Nice clean base. Look at the volume spike on this bar. Look at the volume spike on this bar. Earnings per share rank 88. Composite rating 99. That's a big one. That's big. Earnings up 93%. Sales up 23% last quarter. 2 quarters ago, earnings were up 47%. Last quarter, 93. Yeah, that's called accelerating earnings. That's the stuff that big money looks at. They have rising earnings estimates. They're looking for a 76% increase in earnings this year over last year and a 41% increase in earnings next year over this year. You can see the tops here. See the volume that came into it? Just take out the top of this bar. What's the high on this bar? 37.73. Potential buy on Barrick Mining, 37.80. In a good market with volume.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.